So if you look at after the 2008 and 9 financial crisis, what happened in that phase with the banks is a lot of consolidation happened. Because of the consolidation, a lot of banks acquired the smaller banks or the banks which were not doing too well. And in that whole process, there's no single source of truth for the banks. So if you really look at the data does not talk to each other, there's no common operational definition, etc. Right? So that's one big challenge the banks and the CROs are facing from a single source truth perspective. The second challenge that if you look at the banks that they're facing is the finance and the risk data, they do not talk to each other because the way the data warehouses were set up for the finance teams and the objectives they had to accomplish were very different than the data warehouses which were set up for the risk teams. For an example, the fee income, the exposures, the way finance used to capture and report out was very, very different than the way risk does it. And the regulators want a common view of be it an exposure or a fee income or delinquency or losses. So the data integration, the data single source does not exist in today's environment because of the consolidation effort. Third, because of the new regulations, be it Dodd-Frank Act, Basel III, CCAR, it is qualitative and quantitative techniques. And newer techniques are coming in every day in terms of what the regulators are expecting from the CROs. And complying by all those new regulations is not easy for the CROs, not forgetting that they need to continue to grow profitably. And last but not the least, all of this requires talent. And there's immense war for talent, for execution, for the new regulations which have been imposed on the banks to comply with.